Hey everyone, so full transparency time. I'm going to open up my portfolio. I'm going to show you the things that I have sold, the things that I have bought in the previous 3 months. Let me go through some of the sells that I've made and some of the performance for my portfolio as of the previous 3 months. So the first thing that I sold, there's actually two companies that I sold in the quarter. That was Skyworks and Dropbox. I've had both these companies for quite a long period of time now. And I've taken a small little profit of those. They've gone up a little bit since I sold them. Doesn't matter. It's irrelevant. I'd actually been selling calls for these, both of these. Selling calls is something I do inside of Interactive Brokers and Saxo Bank. Interactive Brokers is the broker that I use for most of these investments, especially the ones that are OTC or in different countries and things like that. There's a link in the description below for Interactive Brokers. It's the one that I recommend. I really think if you're from any country in the world other than the US, Interactive Brokers is by far the best. If you're in the US, you have access to things like Charles Schwab as well. I would have multiple accounts anyway. Interactive Brokers I still think is probably the best out there. Okay, so let's talk about the reasons why I sold. Firstly, Skyworks. Skyworks I think is still actually a really great company. I just had to be honest with myself and understand that the RF frequency market in the tech space that Skyworks are operating in, even though I believe what they say, I don't understand the market enough, I think, to really warrant an investment in this space. Their track record is fantastic, though. I've been following this for about 10 years, this company, and I just think technology is moving that quickly that I'm not quite sure whether a company from another country in the world, Korea or China or anyway, even another American company could create something that could really shake up Skyworks. And I just feel like it was a risk that I wasn't willing to dig into trying to understand. I think as technology expands, this is one of like the picks and shovels kind of plays of the technology kind of revolution that we're going to go through. But I just felt a little bit uncomfortable about the competitive advantage Skyworks had. Once you're in one of these products, it is a bit sticky because they build the product around them, but I just hadn't quite felt comfortable about it recently, and I decided to sell it out for something that I thought was superior. Dropbox I sold for similar reasons that I just think that even though I think it's also a really good company, I don't think it has one. I thought when I first invested that it was a potential 100 bagger, and I now don't believe that's the case. I just don't quite agree with some of the acquisitions that they've made recently. I think they're just Me Too products. And yeah, I'm just not a great fan of the direction that they're going, and I just don't see a clear competitive advantage. So I decided to sell out of Dropbox as well. Sorry for that over-analysis, but I think it's really important to dig into why I sold things. Let me keep moving on with this video because it's getting long enough already. Okay, so other things that have moved quite a lot. So some of the down things, SDI Group is down about 18% on the quarter. That's the biggest fall out of the companies here on my list. But I had some pretty interesting winners. For example, Judgement is up 100% in the quarter. That's insane. I don't think I've ever had a stock move up that high that quickly. Yeah, so that's a pretty interesting move. Up 161% since I bought that one. So Berkshire Hathaway is pushing 100% since I bought it, but that was back at the depths of the coronavirus kind of scare in May 2020. What's something else that's been going really well? Teqnion moved up another 30% for the quarter, which is significant. It's now 78% up on where I bought it. It's starting to get pretty hot, that company. So I'm not selling it no matter what. So I'm okay with getting super overvalued. I don't really care. This is a super long-term play for me. I'm just going to forget about that one unless something dramatically changed in my thesis. Essentially, Johan or Daniel was to leave for some crazy reason. Yeah, no reason to sell that one. What are we looking at that's pretty ugly here? Trulieve down 79% since I bought it. Yeah, that's quite a significant downfall. And then redbubble, Alibaba. Yeah, I've been taking a beating in those as well. So yeah, I've had some good ones. I've had some bad ones. I guess this is the way investing works. And the new company that I have invested in for the quarter is DSW. I've got a video here on my channel about DSW, and that's something that I'm looking at keeping track of for. I probably just bought a starter position in this one. I'm thinking that I will get more familiar with the company over the next sort of 6 months, and then if I still feel if I'm even more confident, I'll probably put some more money in, and if I find something that I'm not happy with, I might even sell it out. So it's sort of that weird starter position time. We'll see whether I add more to it or not over the next 6 months. And then I've been buying very small amounts of what I'm calling a bit of a cannabis basket. I have a lot of videos coming along in my channel about the cannabis industry. Why I think that's fascinating, I'm not going to go into it here, but I think I've got a lot. I think there's a lot of opportunity there in that particular play. Okay, now on the screen is sort of how I calculate my comparison to the S&P 500. I've been tracking this my portfolio since January 2020, just before the coronavirus happened. So anyway, the S&P 500 is up since that period of time 38%. I'm up 23%. So I'm still trailing the S&P 500. And we'll just see where that goes over the next few years. I'm not really that concerned at the moment. I think this pie chart is quite interesting to see how it kind of looks at the moment. There's quite a lot of companies there. I'm trying to get this down. I think I will over time. I'm sort of aiming towards about 10 companies. That's sort of where I'm at. I'm sort of at 15 or so now. I think I'll sell bits and pieces over the years. Something I thought was interesting to look at my geographic diversification. So on this pie chart, you can see how my investment portfolio is split between a handful of different countries of the world, between Australia, Japan, Sweden, Norway, Canada, China, England, and America. So America being the biggest, but China coming in second. Japan is really only Jigen, but it makes up 13% and the rest. So I think it's good to see that I've got some geographic diversification. I think that's makes me feel like if I had it all in America or all in one particular country, that's fine, but then I open myself up to some sort of political risk. If I had it all in China, for example, that's probably the more politically risky play. But only being 20% of my portfolio now, I'm pretty happy with that. So I'd like to think that's going to get significantly bigger, considering I think Alibaba is really undervalued. So yeah, we'll see what happens with that. China might become a bigger piece of that pie, but yeah, time will tell. Anyway, I feel comfortable about this so far, and there you go. There's the information that I think is helpful to some people. I hope that some of the ideas that I listed today in my stock portfolio are new ideas that you haven't seen before. If you're interested, I will have videos here on this channel somewhere about those particular companies. I really want to go down the full transparency route because I think it's really important for me not only to build up a track record, but to also that it also sort of builds up some confidence over time that I'll be able to look back at my videos every quarter for the past 3, 5, 10 years, I hope, and I'll be able to see the progression over time. And I'm keeping track of my performance against the S&P 500 as well, because I think after about maybe 5 or 7 years, if I'm not beating the S&P 500, I might just index. And that's sort of been always on the cards of like maybe I am not as good as I think I am. But again, I am evolving as an investor, and we all are all the time. So it's probably not fair to judge on my first maybe 3 years of where I'm tracking this, because I'm going to be making mistakes, to say the next 5 years, because I'm going to be significantly better. And then the 5 years after that, I'd like to be significantly better again. So maybe I will never go into an index, and I'll never fall. I'll never think that I am not worthy to try to do this myself, because I hopefully will be always improving. And I think that's the mentality of this, but I like to keep myself accountable to the S&P 500, and that's how I do it. So yeah, I'll do this again in early October. Keep following along if you're interested. Subscribe so you don't miss out, and you can keep track of it with me and see if I can get in front of the S&P 500 at some stage. And hopefully I don't just overtake the S&P for a short period of time. I actually go past it significantly and stay well above it for the rest of my life. But we'll see. Follow along if you're interested, and I'll see you in the next video.